What is up, traders? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. So we did see a lot of downside price action last week. It's got a lot of people changing their sentiments. Looks like Bitcoin has stalled out. Looks like it is rolling over. We are testing the trend that we currently have from the January 1st. All right, so let's start with this, ladies and gentlemen. This is a fantastic way to kind of keep you on the right side of the trend if you have difficulties identifying trend, and that is the weekly 21 exponential moving average. You can see that this thing has done really good in the past of either maintaining trend or losing trend, but either way, if price is trading above it, you're technically looking for bullish entries. If price is trending below it, that is when you want to be a seller, and it is still true to this day. Now, on this week here, you can see that we did have a massive breakout. All right, that breakout has so far been respected, retested, and respected. And we are going to look at some other charts, meaning the NASDAQ, SPX, and the Dow Jones Industrial. But the most important thing to understand here is, though we did have a red week last week, as far as Bitcoin's price, it doesn't look terrible. It doesn't even look like a breakdown. It simply looks like a pullback into what could potentially be support. And we will get on with where I am looking for that support later on in the video. First, I want to show you a few things that we were looking at yesterday. This is your '08 bear market, and then this is when the bear market made a bottom. You can see that on the weekly time frame, basically, once you got above your 200 simple on a weekly and you were trending above the yellow 21 on the weekly, notice how close they are with each other. Notice how you had 3 weeks of correction, meaning a pullback down into that area. Took a couple weeks for the rally to finish, or for the, for price to stop, find support, and then take back off again. So if we move on, you can see that we have something similar going on here. Now, this is the NASDAQ. See how you have your 21 setting above the 200 simple. The 200 simple is sloping to the upside. You are still moving to the upside on this. So things will start to look a lot more concerning if we get a hot knife through butter situation, meaning, like, say, for instance, next week, if we were to open, have a slight move to the upside and then a big move lower, that would make us start to change that bullish bias in the near term and potentially have us starting to look at different things. But as of right now, in simple terms, this is probably an area where people would want to start to look to be a buyer. You do have an area of old resistance right there. You can see here how you closed right on old resistance on Friday. So that's a fantastic look. As of right now, this asset still looks good. Now, as shown in the previous example, notice on this candle how you did get a much lower wick to the downside on the next week. That is possible that we do something like that next week. If you do, if you are looking for bullish entries, keep in mind that there could be a much lower wick to the downside, searching out all of those stop losses. All right, coming over here to the S&P 500, I'm going to put this on a line chart real quick, just so you can see, and we got to go back to the daily for this, but you can clearly see this blue line here. This is your line chart. Purple line, weekly 200. This is where the bear market low currently is. You can see that you are in an uptrend and you have still inside of that uptrend. You still have not broken down on the trend line itself, on the daily time frame. So getting rid of that trend line and focusing more on the weekly 21, you can see that we are pulling back into that right now, but also looking at the white line, you are pulling into an area of support. Put the candles back on the chart, you can see that it is objective support at 39.67. We could potentially see a deeper correction next week. It's where do we close in conjunction with this week's close. But as of right now, yes, that is an ugly candle. It does look like you do have a lot of downside momentum, but you did hold support, and we want to see if that support holds in the weeks to come. Also, if I pull up the weekly RSI, this is all in all a constructive look. All right. Notice here how you've got your low, then a lower low on price closing. Here you have a low and a higher low. So you have that bullish divergence there. That is similar to the signal that we've seen on Bitcoin, where we did put in that weekly divergence and we did get that massive bullish rally. Going over here to the daily and turning on all of the moving averages, you can see that you are still very much constructive. Very much constructive. You are trading under the moving averages now, but that is quite okay to do in a pullback. You can see down here on the daily time frame, after the bear market low was put in down there, you consolidated for several days under all the moving averages before then popping back to the upside. So like I said, last week looks pretty bad. It looks pretty rough. Got a lot of momentum coming back to the downside, putting your RSI back under the 50 on the daily time frame, but still constructive and still remains more bullishly structured than bearishly structured. I'm going to pull up a few things here. We still have this breadth data that I spoke about last time. Now, the source for this is at Quantifiable Edges, and I got it from Chiavaco Capital. You can find him on YouTube. Just type in that name right there. He goes in depth on this very topic, this very subject, basically talking about breadth signals or market breadth thrust signals that happened. Also, I want to go over this briefly because we have seen that when this signal occurred in the marketplace, or the last time that these signals occurred, you can see going out to a year that your average yearly return was roughly around 26%. It does not predict the future. It does not mean that this is something that is going to happen for sure. It just has a very high probable hit rate. And ultimately, here is something else I wanted to show you. This is just basically your 2000 bear market, 2001 bear market, your 2008 bear market versus the bear market that we had in 2022. And you can see that when you made your lows on the CCI index, basically, this is what you had after the lows were set on all three times, all three of these bear markets. This is currently what we have now. So this looks more like this or like this. And when we got these signals on this indicator, you did not go back and make new bear market lows. The bear market low was in. Now, the concerning things, like I said, there are some concerning things out there. First and foremost, the dollar. The dollar has not only gotten back above its yearly opening range, it is trading well above, and this week with the data we got this week, trending nicely above. So it does look like you do have a bullish breakout on the dollar. You are coming into an area of resistance, however. That area is there. Now, you did get a daily close above, so what we typically like to do is we like to look for the longer or the higher time frame resistance levels. And if you look at that as well, you can see, yep, you did get above. You took out last week's high, and it appears as if though your next target to the upside would be 105,631 if the bullish continuation or the bullish momentum is to continue. I do believe that ultimately this will be a selling opportunity, but if we start to trend above this swing high and this swing high, 105.82, then obviously that will mean that there is a higher probable chance that I am wrong on being short the dollar. Now, our dollar short positions are from up here, guys, so we're not going to lose any money on the dollar short that we have already taken. It's just we will start to think about repositioning ourselves for what could be either a choppy year or more bullish prices on the dollar. Second thing that I have that is very concerning is the Dow. The Dow has broken down on the daily and on the weekly time frames. So here's all your major moving averages. You can see that you did on Friday close below the 200 exponential. This down here is your 200 weekly. You got plenty of room to go. That is also where your bear market lows are. So yeah, it's concerning that we broke down below all of those moving averages there. And we did take out, a pretty key low over here. We did make a lower high here. It is concerning, but it's not yet damning. It doesn't mean that we're going to start looking to sell any rallies here. As if I pull the indicators off briefly, put the line chart back on briefly, you can see that you still have an area of support right there. So you can trade as low as 32,727 and still remain bullish. You are in a longer term range here, right? This is the start of the year. So you've made a market high. You are now putting in a yearly low, a yearly high, excuse me. You are now putting in a yearly low. So is it possible that this thing finds support and then heads back on up and makes fresh yearly highs from this point? Or is it possible that it goes back down and makes a fresh bear market low? Yeah. And yeah, it is. Either one of those two things are possible if you take into account what we currently have, which is a near-term range. This looks more constructive as consolidation at this point than it does look like a breakdown at this point. Now, if we're starting to trade down here, we will have, like I said, a lot of things will be different, and then we will have to take a different approach at what we are currently looking at. So putting it back on the weekly and taking off all of the moving averages except the 121 as discussed earlier, you can see that you have broken down below that and you have lost it. But we do know that traps exist, so we're going to look to see if this is a near-term bear trap or do the bears actually have something going here. But ultimately, here we are again. Bitcoin is the king of all assets. We have broken down below the 21 exponential, which is okay on a daily closing basis. We have taken out daily supports. All is good there on that front. You are currently trading above a demand level on the weekly, but that's not really the level I'm concerned about. The main level that I'm concerned about losing would be $20,909. If we get all the way down here, then break down, that would look a lot more concerning to me, as that would indicate there is potential to see lower prices. But still, the same remains. You still have a more constructive outlook here than you do a bearish outlook. Even though the market data that we've gotten to help February be a pretty nasty month for some indices. If you take a look at Bitcoin's monthly, there's 3 days left on this close, guys. What does that look like to you? Does that look like a nasty bearish engulfing? No, it's not. It's a doji, right? It's a doji on the month. That typically is a good sign after a explosive expanse move like that. You traded straight into monthly resistance and you've had a pullback. That is normal constructive price action. So yes, we do see some things that are concerning out there, and there is some data that's coming out that could lead us to believe that we may see some stickier than normal inflation, or stickier than we thought inflation. However, the economy is in really good shape still. The jobs market's still in good spot. If this video was helpful, please show that to me by smashing the like button. Also, if you're new to the channel, hit that subscribe button. Make sure you hit the bell notification. That way, whenever I put out an upload or go live, you will be notified, as we do take live real trades during the live streams. And I do not mind if you follow along with me in taking those trades. So until next time, make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.